I'm going to tell you something that will make you uncomfortable. Most of you watching this right now will fail. Not because the market is rigged, not because you lack intelligence, not because you don't have access to information. You'll fail because you cannot handle the truth. And the truth? The truth is brutal, silent, indifferent to how much you think you know. It doesn't care what book you've read, what guru you follow, or what indicator you've plastered across your screen. If you cannot control yourself when the market tests you, and it will test you, you will be eliminated. No warning, no appeal, no second chance. I've seen it happen 1,000 times. I've lived it myself, made fortunes, lost them, made them again. And through it all, one thing never changed. The reasons traders fail are always the same. The patterns repeat endlessly. Men enter this game with dreams and exit with regret. They chase noise, ignore logic, trust strangers, and refuse to see what's right in front of them. The tape tells them everything. They do the opposite. This is not a game of predictions. It's a business of execution. What you think doesn't matter. What you do is everything. And if you don't understand that now, the market will teach you the hard way. So listen carefully. What you're about to hear won't comfort you. It will confront you. And if you're not ready to face the real reasons traders fail, you'll become another statistic. Before we go further, subscribe to this channel, like this video, and leave a comment below. Any comment. By doing that, you help others find this message, and you remind me that this work matters. Now, let's begin. Every trader begins the same way, full of excitement, full of hope, full of confidence they haven't yet earned. They open their first position, maybe it's a stock, maybe it's Forex, doesn't matter. The trade moves in their favor. A few dollars, then a few more. They close it, profit locked in. And in that moment, something dangerous happens. They believe they've figured it out. They think, this is easier than I thought. I can do this. But that first win isn't a lesson. It's a trap. It teaches them the wrong thing. It rewards randomness and disguises it as skill. Let me be clear. The most dangerous moment in a trader's life is when early luck is mistaken for talent. That illusion is powerful, intoxicating. It creates overconfidence, and overconfidence invites recklessness. They start sizing up. They ignore their plan, if they even have one. They assume that because it worked once, it will work again. But the market doesn't owe you consistency. It doesn't recognize your past success. It doesn't care that you won yesterday. It only reacts to price, to pressure, to reality. I made this mistake early on. When I was trading in the bucket shops, I thought I had mastered the game. I was winning, consistently. I felt invincible. But those shops were a sandbox, a controlled environment with slow execution and limited risk. When I moved to the real exchanges, everything changed. Execution was faster, spreads were wider, the dynamics were completely different. My capital disappeared, not slowly, quickly. Not because my strategy was flawed, but because I didn't understand that the game had changed. The market punished my arrogance without hesitation. And here's what I learned. Confidence not backed by structure is just exposure. It's not strength, it's vulnerability dressed up as courage. Most traders never grasp this. They think the goal is to be right, to predict the next move, to outsmart the market. But that's not the goal. The goal is to survive. The traders who make it past the first year aren't the smartest, they're the most disciplined. They learn quickly that a small win means nothing, but a loss, studied, understood, respected, can save you a fortune down the road. The market doesn't care about your early results. Neither should you. The only thing that matters is what you do when you're tested, and the test always comes. There is one mistake more costly than any other in trading. It's not picking the wrong stock. It's not entering at a bad price. It's holding on to a losing position and hoping it turns around. That silent act, waiting just a little longer, has destroyed more traders than any crash, any news event, any black swan ever could. Let me walk you through how it happens. A trader enters a position, it starts moving against them. Just a few ticks, a small pullback, nothing alarming. They don't react, they watch. The price moves further. Still, they don't act. Instead, they rationalize. It's just noise. It'll bounce back. I'll give it a little more room. So they wait. And while they wait, the loss grows. Now it's not just a few ticks, it's a few points, then a few percent. The pain increases, but so does the resistance to act. Why? Because closing the position now means admitting they were wrong, and that hurts more than the financial loss. So they hold. They enlarge the time frame. They scroll for news. They look for confirmation bias anywhere they can find it. But deep down, they know. They just refuse to act. Hope replaces logic. Emotion replaces structure. And the longer they hold, the worse it gets. The loss isn't just on the screen anymore. It's in their thoughts, their confidence, their identity. They can't let go, not because they believe in the trade, but because letting go means facing the truth. I've been there, more than once. I remember holding a position well beyond my stop. I had reasons, good ones, I thought. The market was overreacting, the fundamentals were still strong, it was just temporary weakness. All of it was fiction. The result was fact. I lost more in that one trade than I had made in the previous 5 combined. It wasn't the market that did it. It was my refusal to obey my own rules. Here's the truth. A small loss is just a trade. A large loss is a mistake. And the difference between the two is time. Every second you delay is another second you're giving your account to the market. You cannot afford that. The smartest traders I know aren't the ones who win the most. They're the ones who lose the least. They take losses quickly, cleanly, without hesitation. They cut what's not working and move on. Because they understand this fundamental law. If you cannot take a small loss, you will eventually be forced to take a catastrophic one. And when that day comes, you won't be trading anymore. Most traders never build a system. They follow feelings, rumors, tips, hopes. They chase setups they don't understand. They enter without clear signals. They exit based on fear or greed, not structure. This is not trading. This is guessing. And the market has no mercy for guesses. I learned early that instinct is unreliable. What feels right today will look foolish tomorrow. But a system, one you've tested, refined, and committed to, is the only protection you have against chaos. Without it, every trade becomes an emotional reaction, and emotional reactions have no edge. There was a period in my career when I acted purely on impulse. I'd see a stock moving and jump in. No plan, no confirmation, just excitement. Sometimes it worked. More often it didn't. But the real damage wasn't the losing trades, it was the inconsistency. I couldn't measure success because I had no baseline. I couldn't identify mistakes because I had no rules to violate. I was trading in the dark. That's when it hit me. Without a system, I wasn't a trader. I was a gambler with a brokerage account. So I changed. I built a method, simple, repeatable, based on observation, not emotion. It told me when to enter, how much to risk, where to place my stop, when to exit. It wasn't flashy, it didn't promise riches overnight, but it worked, because it removed doubt. It gave me structure when my emotions wanted chaos. You don't need a complex system, you just need one that's yours, one that you understand, one that you can follow under pressure. It must be grounded in logic, not hope. It must be measurable, so you know when you're following it and when you're not. And most importantly, it must be followed. A system you don't follow is worse than no system at all, because now you know what you're supposed to do and you're choosing to ignore it. The market punishes randomness. It exposes improvisation. If you want to survive, build a system. If you want to thrive, follow it without exception. Emotions don't announce themselves. They don't shout warnings. They whisper. They tell you to hold a little longer, to take profit too soon, to enter when you shouldn't. And if you don't recognize them, they will control every decision you make. Fear is the first enemy.
It shows up the moment a trade moves against you, not because the loss is large, but because the pain of being wrong is unbearable. Fear freezes you. It tells you to wait, to hope, to believe the market will reverse just for you. But the market doesn't care what you believe. It rewards execution, not faith. Then comes greed. Greed doesn't show up in losses. It shows up in wins. A trade turns profitable, suddenly you want more. The plan dissolves, discipline softens. The idea of giving back profit becomes unbearable, so you take it too early. Or worse, you stay too long, trying to squeeze out every last tick. Either way, the result is worse than if you just followed your rules. I've felt both. I've exited trades early out of fear, only to watch them run exactly as planned, without me. I've stayed too long out of greed, turning a good win into a break-even or a loss.